As I always say, don't be in a rush to click buttons. Um, what I did on today's video is I put a little bit of a new trend line here because, as I said, above 59.17, the market was going to go 60.50, but to be cautious that we had a pivot coming in. And my guys were shorting the bond sales. It looked like the bond sales weren't going to be very good. And the seasonality is that the market takes some off the top into a 3-day weekend, right? The market has trade plus one to liquidate some cash into a 3-day weekend. We can pull back. But I put a little bit of a trend line here because if I see a trend line breakout of 59.17, that means, again, the trend line broke down. I told everybody, you short when the trend line breaks cautiously, right? You move your stop loss. The trend line was going to break um, based on the Wednesday pivot, but now the real short comes back on the back test. Yeah, can it go down and you hold your, yeah, keep holding your runners. I said 58.30 was going to be a retest. We got that in the pre-market, but it held, right? Market makers aren't done yet. So I say if 58.30 holds, which was the previous support to break out up here, then you want to take another long, but be careful because again, the trend line broke. You want to get above 59.17, back test to 60.50 or possibly 6,200 into CPI. Seasonality says that next week should be a little bit of a low. Nvidia, if it's a miss, it'll bring the market down about 30. Nvidia will come down about excuse me, about 30 points. But the key is 58.30 holds, you're buying dips and letting it consolidate. 58.30 fails, we're coming back down to 57.71, which is kind of the area I wanted, or 57.30. That breaks down, we're going to retest this trend line, which would turn the support of this bull flag. This would be a back test of the bottom portion of the flag, right? So we can come down a little bit shy of 57.36, breakout squeeze, and keep on running. We're in bull season, and this is still a bull flag. Breaking down trend does mean that the market is going to come back to get liquidity. So you want to be cautious. 58.30 again holds. Take a long. If this new three bar trend line breaks out, that means again it's a bear trap because it's bull season, and we're going to come back up possibly into Nvidia earnings. And I suspect straight into CPI. The market tends to be bullish into the first week of June. And then if CPI is hot, then Q2 is over and we start rolling down into OPEX. If it's bullish, we just keep squeezing and squeezing and squeezing for the Q2 run. But again, take it level by level. If you shorted the breakdown, as I said, you're moving your stop loss. You don't want to get eaten up when market makers, like I had said back here, are going to back test a trend line to trap liquidity and then dump it. They're not going to make it easy for us. If we fall under 58.30, take another short, just run your stops to the 5,700 area. That breaks down. You're still running your short to either this trend line or at 5,600, which is what I'm hoping for. I'm hoping for something in the 5,600 area between now and June, so I can take longs into the July run. For 21 years, the summer hasn't been bearish. That's including last year's carry trade, which my team caught. So if you want to learn what we're using, how we're drawing this, what dates, what pivot dates we're using, what AI we're using, what risk management, comment course below, and we'd love to have you join us.